Well, we've done that. The Indian markets have hit the lower circuit. The Sensex in particular is 10% lower. The Nifty is stone's throw away from there. The Bank Nifty a bit more than the 10% mark, 12.74 for the Nifty Bank, as you can see on your screen as well. And the chart out here shows that the trading is halted from now on for the next 40 odd minutes. Remember, now we've experienced this in the past, so we kind of know the template. The fresh bout of pre-open session will happen at 10:42 a.m. and the fresh trading will start at about 10:57 a.m.
Yeah, that's a 15-minute gap. Usual how pre-open.
The usual how pre-open happens, but. Well, we were looking at staring down. I think it doesn't come as a surprise.
True.
But just the fact, Devina, that now we've hit 2 lower circuits and a bunch of other 7-8% days in a matter of 6 or 7 sessions.
The scare is that you don't know what happens when this circuit opens at around 11ish. This is what the Sensex map looks like in terms of the losers. The big cuts, obviously, and like Niraj already highlighted, Nifty Bank's down about 12%. So your bottom half is only mostly financials. So Axis Bank has dipped 20%, ICICI Bank 15%, IndusInd Bank another 15%, Bajaj Finance, Hero Motor Corp. These are your losers. Amongst your better performers, but they too are down and out, include the likes of a Nestle, TCS, ONGC and HCL Tech. So IT also, despite the rupee doing what it's doing, there's no tailwind whatsoever. Mr. UR Bhat is joining us right now to take us through his views as well on the market. Unprecedented, Mr. Bhat. We've been hearing that word a lot in all our conversations. But, you know, there has to be some glide path. There has to be some kind of, commentary around how to even read into these kind of moves and protect yourself or guard yourself in terms of your portfolio.
Well, I think the market always goes with some base case. And here the base case is that we should be able to deal with this in some time, maybe 4, 6, 8 weeks or something like that. The base case is certainly not going to be that we can't deal with this, because we have one sort of benchmark where probably China has grappled with this over some time. Maybe I think it started sometime early January, so maybe over a period of about 8 weeks or 10 weeks, they have dealt with it, even though through means which probably all democracies may not be able to handle. But I think in India, all said and done, we have probably started getting alarmed about this pretty early, and that is why the numbers are still not very high compared to, say, for example, the US or all the developed markets have more problems than we have as of now. But if we are able to contain this in some manner, because therefore that information about fresh outbreaks is going to be a very important monitorable for the market. So as of now, I think the market thinks that it will be possible for India to contain it over the next month or two. And that is the basis on which I think the market is functioning. But if this assumption is wrong, proved wrong, then I think the market can come down further. But generally, markets don't fall by more than 30% in one shot. That we have already reached that. And the next level is generally twice that, about 50, 60%. And I think we are not there yet. But I think that could be a very important support for us. Of course, with the hope that we will be back in business sometime.
Right. Mr. Bhat, the other comparison that people make is the market cap to GDP to the GFC. So during, the troughs of the GFC, you had the market cap to GDP, which was somewhere closer to about 51%. We are very close to making our approach towards those lows now at about 56%. Do you think that one should read materially into that, or the situation is completely different?
Well, I think the GDP itself would probably, the denominator itself would come down quite dramatically, because GDP, whatever our estimate when we started with, is probably not going to be true anymore. That is one. So therefore, that may not be extremely relevant, because if GDP is a static number and market cap is a variable, then I think that ratio is probably meaningful. But more important than that, I think as far as India is concerned, it may not be a great ratio to watch, because the bulk of our businesses are not listed. So therefore, market cap and GDP, I don't know how relevant it is compared to, say, for example, the developed markets, where almost everything is listed. So, but and slowly the listing phenomenon is going up. Of course, there has been a lull for some time now. But otherwise, in the small, mid and small cap, mid and small businesses, MSMEs are not listed in India. So therefore, and they account for the bulk of economic activity. So therefore, I don't know whether that metric is very, very meaningful in India. But anyway, changes over time, I think, is meaningful. So therefore, I think if it is crossing that 51, if it's breaking the 51% mark, I think that would be probably have some information value, but not as much as probably what we would normally think it suggests.
Yeah, and Mr. Bhat, good morning, Niraj here. Just
Good morning.
A follow-up to that would be whether, I mean, and I made the point perfectly, the GDP numbers will be revised downwards. The issues that largely seem to be happening in the banking space and the crisis of confidence there. We have an HDFC Bank con call today at about 12 noon, which could be important too. But would you reckon that, I mean, the falls that we're seeing, Mr. Bhat, Axis Bank is down 20% in this fall, IndusInd Bank about a 15% drop, ICICI Bank about a 15% drop. Do you reckon that right now this is foreign money leaving the shores at almost any price, and until that shows some signs of a meaningful reversal, we may not necessarily have any kind of recovery, even after we find the cure to the pandemic? Or do you believe the markets are pricing in the worst right now?
Well, I think there is a natural sort of stop for even foreign money to go, because first the market itself is falling quite sharply, plus the rupee is depreciating quite sharply. So therefore, even though the market may look like that it has fallen by, say, 40%, but actually they will probably, by the time they take the money back, they would have fallen about a half. So therefore, at some stage, they will find that it is not worth selling at these prices in dollar terms. So I think that's a natural sort of a break. But if there are huge redemptions by the underlying investors, they may have to continue to sell, whether it is ETFs or retail sort of mutual funds, international mutual funds. But I think there always will be long-term investors like pension funds and insurance companies and the like, who would probably find value here. So it is not a one-way street where everybody will sell. There will always be long-term investors who would be interested, even among the foreign investors. And of course, domestic investors, as long as money keeps coming into the domestic institutions, insurance companies and mutual funds, they'll be able to support in some way, but may not be if the impact is as high as $4, $5, $6, $7 billion a month. But if it is a couple of $1 billion, I think the domestic institutions may be able to support. As of now, they are not able to support because the impact is too much and the selling is at heightened levels. So at some stage, even international selling would probably come down because it may not be worth selling for them in dollar terms. And second, there will always be some institutions of long-term sort of outlook, like insurance companies, pension funds, will come and probably buy when the values reach certain levels.
Okay, Mr. Bhat, appreciate you taking that quick time out, but we look forward to have you more often, Mr. Bhat. If days like these continue, we might need more advice from you over the course of the next few days. Thank you so much for joining in today.
Thank you.
You know the point that Mr. Bhat was making, that you'll have domestic institutions coming in, probably foreign institutional investors will not find it. It won't be a good enough option for them to sell at these prices. The point is that 76 in the rupee, will they even come back in?
Yeah, I mean,
because it's still not worth their money, right?
Yeah, I mean, if the belief that they would have that the currency is going to depreciate further, then yeah, that's a natural hit. And mind you, I mean, in the last 9 days, this is a 9-day chart from sub 74, from above 74, and this chart is almost the inverse. We are now at 76.05, so that's about, in the 9 days, about 2.65% dent to any foreign portfolio holder which was holding the money as of now, in addition to the price dent that happens as well. So do people take a currency call at some point of time? If you were to depreciate further from 76 to, let's say, 77, 78, that's not out of the realms.
Yeah.
People have spoken about it.
Yeah.
Then maybe that puts a bit of a near-term floor, and then the currency equation goes out of the window. But for now, I don't think anybody's looking at Devina. And it's looking ominous. If frankly, just look at the banking chart.
Yeah.
I mean, that's the one that I'm looking at. And it's looking
12.7%.
ominous right now. Look at just, the kind of cuts that have come into
And
some
how
of the
much?
private banks.
And DIs, it's not like they haven't been buying, right?
Yeah, equal amount, almost every single day.
But it's still not being able to support the market in any meaningful fashion. Because
Yeah, the impact cost is just so high right now. But viewers, remember, as we said, we need to take a break right now. We'll wrap it up for this coverage. But at 10:42 is when the pre-open rates set in. So we'll be back at about 10:41 to take you through the pre-open session and the market opening session yet again. Twice in the last 2 weeks, we've had 2 market openings in a single day. We'll be back. Stay tuned to BQ Live.
According to a recent report, women today contribute nearly 74% of real estate buying decisions. This